Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 30th, and we do got a couple important economic news releases, but we'll start off with the weekly jobless claims. We start off last week with 329,000 people applying for unemployment. The forecast for this week was supposed to be in the same range at 330, and it jumped up to 348. So 348,000 people applied for unemployment with today's numbers. So a little bit higher than they obviously forecast or expected. The next item, of course, is the GDP for the fourth quarter. This, remember, there will be three revisions on this. So this is the first revision, and then the final one will come in March. And this is what so back in December, the third quarter, the final revision for the fourth quarter or third quarter came in at 4.1. So it came in pretty nice. But the fourth quarter came in at 3.3, and it came in at 3.2. So just slightly under the forecast. So not a bad number, but came in just slightly under the forecast. Now, we got to be cautious with this, primarily because with the GDP, remember the durable goods orders came in last week, and that came in much lower than anticipated, which some people are going to revise maybe lower. They may or may not have done it with these numbers, with their forecasts as a result. Also, we got the pending home sales, and we had a 0.2% in November, and of course, we had a huge miss with a minus 8.7% in the month of December. So this could also be a big factor, as real estate does play a big factor in the GDP numbers. And this could be also a factor that we could see a decrease as we approach the March numbers, the final revision on these. So be very cautious. Now, the pending home sales, I do think will pick up. I think it had to do with the personally, I think the East Coast, Midwest were experiencing extreme cold weather, so that kept people out. Also, just locally, we were seeing a huge drop off that people are just taking the time off, taking the break. But since then, we've seen a pretty quick turnaround in the month of January, where people are out looking, making offers. Homes are starting to close and stuff. So we did see a big drop off in the month of December for the holidays, and then pick right back up in January here. So we'll have to kind of wait and see, but I think you'll see better numbers for first quarter in terms of housing. Now let's go ahead and take a look at the headline news. And currently the stock market is up. Now yesterday we had the FOMC had their statement at 11:15. We've done this prior to. Basically, went as expected. There's no surprise. They did reduce it by $10 billion. There's no comment as to the 6.5% of unemployment if they're going to raise interest rates based on that. There's no change in that language. So the Fed Beige Book will be interesting to see when that comes out later on. See what what they're talking about behind the scenes, so to speak. That was not in the statement. So that will be an important tool coming forward when that's finally released. Also, yesterday, it was kind of carrying over to today. China showed some contraction in their manufacturing, so there's going to create some concerns as to them being the second largest. How is that going to play out with the rest of the world? And of course, the U.S. We were showing some steady progress. How is that going to affect us? Is that going to drag us down, or are we going to be able to still grow with them contracting? We'll have to kind of wait and see as that plays out as well. So let's go ahead and take a look at the bond market and see what interest rates are doing. So we had a nice improvement yesterday. As we see, we hit the ceiling and pulled back. We were way up there. And then today we're slightly down from where we left off. We're at 101.09 versus 101.19. But it's 10 basis points, so we're on the verge of worsening worse price, but we're not quite there yet. Usually we want to see 12 basis points or greater for a lender to make a change in the pricing. So with that in mind, we are hovering above the floor of a ceiling. We do need to keep in this range, so we don't, we have to be cautious here. But for the time being, this is looking pretty positive for the bond market, and so we're showing a little bit of improvement in the interest rates. But today we're about the same where we left off yesterday. All right. Thanks for watching, folks. Hope you have a wonderful day, and we'll look forward to seeing you guys tomorrow, as we do have the consumer sentiment coming out tomorrow.